How much return I am expecting when I just bought 100 shares of the stock? In this video, I'm going to cover the percentage gain I'm expecting in the next few years for the stock, the positives that attracted me to this investment, and the negatives that makes me stay vigilant and follow the stock each quarter. Please note, this is not financial advice. I'm not qualified to give financial advice. I'm simply recording my thoughts. Please do not buy the stock based on this video. Please do your own due diligence. This is for entertainment purposes only. Don't forget to smash that like button, subscribe to the channel, and let's continue growing together. Now, the stock that I bought is Figma. It's trading at $35 at the time of this recording with a market cap of $17.5 billion. Now, based on its past 12-month revenue, it has a price to sales of 20, which is still on the expensive side. But companies of this sort, which have a lot of positives going on for them and may not trade at the cheaper valuations. Now, please note, previously, we've done 2 videos on Figma. The first one is when it went public on its IPO. And the second video was just a few months ago. We mentioned we would enter with a good amount when Figma drops to the 30s. And it did drop to $35 and we bought. So as you know, a great business bought at a great price yields great returns. This is the reason we waited for the stock to come down from over $100 to early 30s to buy the stock. So the question is, why Figma when there are a lot of cheaper stocks available in the market? Now for this, we have to show you the positives. Figma has strong revenue growth. It grew its revenue by 41% in Q2 2025 and 38% in Q3 2025, crossing 1 billion annual run rate. High dollar net retention rate of 130%. That suggests that their clients like their product and they want to spend more. Gross margin is at 89%, just like Adobe. However, it did take a hit in Q3 to 69% due to AI hosting costs. But this is still good gross margin. The balance sheet is attractive with net cash position of over $1 billion and minimal debt. Now, Figma is expanding its customer base and continuing its product innovation. Now, all of these qualities point to a company with strong value proposition that is taking market share while maintaining good cash flow. Now I will talk about the negatives. Now, the biggest complaint about Figma has been its humongous stock-based compensation. They handed over $1 billion for 9 months of 2025. This yield in a heavy dilution. Now, we do consider dilution in our valuation, so this is covered. As a result of this high stock-based compensation, the cash is preserved, but the net margin is going to get affected and it's going to be in a bad situation. But this is still early stage, and once Figma gets to scale, the margin should get optimized. Figma does face intense competition, so this is something to be aware of. Finally, the growth is decelerating, which is expected. As the company grows bigger, it is harder for them to grow. Overall, for me, the positives outweigh the negatives, and I entered the stock at $35. I am expecting a stock price between $62 to $100 in the next 5 years. Now, this will get me anywhere between 2x and 3x gain in the next 5 years based on the fundamentals. But Figma, like companies like Figma trade typically at a higher multiple than what I considered in my valuation. So realistically, I think it should be well over $100 before 2030. So I am waiting for that 3x before I consider selling the stock. Until then, I am going to tolerate the volatility and keep on following Figma and its earnings quarter after quarter. What do you guys think? Let me know your thoughts in the comments, and thank you always for watching.